Hi student, good day. Today we're starting with the chapter 10 for financial accounting. Chapter 10 is relating to receivables. I hope you are doing well and studying hard for your exam preparation. Wish you all the best. So this paper will help you for speed up your learning process and be prepared for your exam. Our focus is examination only, and we make a quick learnings and very fast to the point explanation. If you need any question during this study, you stuck somewhere, do contact me. And if you want one-to-one sessions, just let me know. We will set it out. Okay, upon completion of this chapter, we will explain the example of receivables, understand the purpose of aged receivable. We will discuss what is the aged receivable, record the adjustment ledger accounts to write off an irrecoverable debt and one that consequently recovered, record adjustment of ledger accounts adjusted for, and identify the impact of those adjustment on profit and loss account, how we will take into consideration. So this is overview, trade receivable, allowance for receivable, and irrecoverable debts are those which are clients are your buyers run away and they are not no more available in the screen. They just bankrupt or any reason. Trade receivables and in the ledger accounts. So this is the trade receivable ledger account. Trade receivable general ledger normally include the following entries. So this is a balance brought forward, credit sales. This is all. This is a perform for your understanding and from for your to recall your previous learnings. Number item above can be classified as follow. Is go through this one, easy one. Cash and credit sale. If cash sales occur, customer pays the goods services at the point of sale, assuming that receipt immediately banked and then debit cash and credit sales. This is the normal way of transaction. Under the accrual concept, so accrual accounting entry or record for the credit sales, a trade receivable, debit and revenue sales is a credit. The provision of credit facilities. This is explained further. The benefit of business increase sales and they have a more sales upwards. But the age receivables mean how many days they receive clients it takes to pay off. Where credit facilities offer customer a business need to review and manage the individual customer accounts which have been granted credit. How many days they take to pay off. Credit limits they will set. So whether they each credit limits. This is the way the irrecoverable debts and allowances. If the customer are unable to pay off, so how they will consider it counted for irrevocable debts. So irrevocable debts, debit and trade receivables are credits. This is your understanding they have mentioned. It will clear your doubts. Accounting for recoverable debts, how you will account for. So when debts was written off, double entry in the journal ledger is was happening. So irrevocable debt expenses debit, credit is a trade receivable, removing the debt from the accounts in your ledger account. When payment is received from customer, the normal accounting entries, cash at bank and their trade receivables are showing there. Net effect is also there for recording this transaction. Allowance for receivables, if you are giving any allowance or provisions are taking into consideration for in your books, accounting for allowance for receivable, irrevocable debts. So allowance receivable set up with the following accounting entry, credit allowance for receivable in books of account. They create already, they create allowance for receivables for bad debts, written off. They when calculating account movements. So these steps are taken care. Write off irrecoverable debts, calculate the trade receivable balance, ascertain, compare the new and old brought forward allowances, account for the balances. This is all your auditors takes place. They just check all these entries are accurate in their books of accounts. So these are the practice questions or parts which will test you in the examination. These are all three accounts for this illustration, which we just now we are moving forward. This is chapter summary for trade receivable, allowance receivable, irrevocable debts. Irrevocable mean which are not recoverable, which is gone. Okay, student, this is all for chapter 10. See you in the next chapter. Wish you all the best. If you need any question, if you want to join one-to-one sessions, do contact me.